investors using debt to buy stock. So they borrow against their portfolio. It's called margin debt or margin accounts that they have. This created an enormous amount of bankruptcies in 2008. We learned lessons from that though, right? Yeah, we did. And the lessons lasted all the way through 2010. Why? Because we have the shortest memory of any animal on the face of this earth. We quickly forget and start chasing our greed and passion for money. So debt investors now, margin accounts right now has climbed to $778 billion, $778 billion. Use your imagination and try to imagine what is going to happen if we have, not if is probably the wrong term there. Can you imagine what's going to happen when we have a severe pullback in markets? So let me draw you a picture. You're borrowing against 50% of your value of your portfolio. Your portfolio, some stocks, they may find a little bit worth more. It might average out a little bit higher, a little bit lower. But if the market drops, what happens to your portfolio? The value of it drops dramatically. The value of it drops. Now, 50% of the value of your portfolio could very easily be less than all the money you have out on margin. It's happened several times before. 2008. No big deal, right? So the brokerage companies call in their margins. Means you got to pay them back. You don't have to do it if you don't want to. They'll just take your stock to do it. They will sell your portfolio in order to get their margin money back. That means as you are borrowing money on margin, I never talk about margins. You know that. I never even talk about it. This is right now the longest I've ever talked about margins because I hate to even bring it up because I don't want to ever seem like I'm encouraging margin use. I don't talk about it anywhere on my website. It's not even in my vocabulary because I don't even want to talk about it. But I'm trying to point out that we could have severe problems going to be worse than 2008. Because the margin call is going to look like something like this. Mr. Smith, you have no money left. Well, wait a minute. No, I have all my stocks. No, sir. We sold all your stocks. You can't sell all your stock. Oh, did you read your margin agreement? Well, yeah. Did you see in there where we do whatever we got to do, including selling out of your positions in order to get our money back? Well, no, I guess I didn't. I thought I read that. I don't remember reading that. Well, no, of course you didn't. You didn't care about the fine print. You only cared about getting more money so you can invest more, so you can make more. And now you're bankrupt. You have nothing. Well, wait a minute. How am I ever going to recover if I don't have any more stock? Exactly. It's not like, well, I'll just sit on the account and wait for it to recover. No. There's nothing to sit on. The stock has been sold. You can't get it back. Even if the market turns around next month and doubles where it was before, you got nothing. Zero. It's all gone, sold. You don't have any stock left to appreciate back up.